We've seen the day. It's been fairly mixed. We had that major announcement out of the US, and then we've also had our own jobs figures. Have both of those played on the market?
Helen, it's been an absolutely massive day on the Australian share market. As you mentioned, we've seen that interest rate hike in the US, and then we've seen the job numbers out here domestically. Not only that, we've seen a central bank meeting by the Bank of Japan, and then we've seen the People's Bank of China also moving on short-term interest rates. And then just to add into the mix, it's also the expiry of index options and futures for the Australian market as well. So all in all, a huge day for the Aussie share market in terms of volumes and in terms of the amount that we're seeing traded through the market. I think one of the biggest influences on the Australian market this afternoon, though, has been that move by the People's Bank of China to lift short-term interest rates. That's raised interest rates by 10 basis points to its medium-term lending facility as well as its open market operations, reverse purchase agreements. And look, they've said this isn't a change to its monetary policy, more probably designed to stem the outflow of capital, given that interest rate move that we've seen by the US overnight and funds back to the US. And if we have a look at around the time that this move occurred, it really does coincide with that sell-off that we've seen in the afternoon for the Aussie share market. So just watching that People's Bank of China move and the move that we've seen in terms of the Aussie share market. We're also seeing a move in terms of commodities, with commodity prices coming off a little bit.
All right, Julia, just on that People's Bank of China move, so you're saying really this is another way they're trying to curb movement of funds?
We do see the People's Bank of China trying to influence liquidity through these types of moves. The last one that we saw was just before the Lunar New Year to help liquidity into the market, and this is the second one that we've seen in basically 2 months. But altogether, I guess the market's just a little bit nervous given that we are seeing some pretty big economies moving on interest rates at the moment. But look, it looks like it's designed to curb the outflow of capital from China, which China's been trying to crack down on for a while now. And of course, with interest rates going up in the US, we could see capital flowing back to the US, especially in conjunction with the strength that we're seeing in the equity markets as well. So the top 200 have come off. We are seeing selling in the banks coming into the afternoon, as well as the healthcare space, which is to be expected given the strength of the Aussie dollar and how currency sensitive those big healthcare companies are. But on the flip side, we're still seeing that strength come through from the materials, the energy, the industrials and the property sectors today.
Yeah, so something I wanted to ask you about the takeover proposal for Queensland Infrastructure Group Seymour Whyte. Now, what's behind that? Because the proposed bidder hasn't been revealed, has it?
I think this is a French company that is interested in getting a foothold into the Australian market. Of course, great news for Seymour Whyte shareholders. The shares are up by 22% today. And if we have a look at Seymour Whyte's business, it's a construction company, but it specialises in infrastructure services. So it does things like upgrades to roads and really targets those contracts that are worth around about $200 million to $500 million. Now, recently, we have seen revenue at a record high for Seymour Whyte, and the work in hand is quite strong as well. We know that they have been talking to a few parties here, so for shareholders of Seymour Whyte, I'd probably be holding off to see whether a counter bid does come through. But at the moment, it does look like it's French company Vinci looking to get a foothold into the Australian share market. It is only an indicative proposal at this stage, so it looks like the takeover bid may be worth about $1.36 to $1.43, depending on the size of the special dividend and the franking credits, which are also involved. But the shares at the moment trading at $1.34. And in particular, we know that Seymour Whyte was also in talks with Watpac, which is a Queensland-based construction company, on a possible takeover as well. So watching to see whether a counter bid does come through from Watpac.
All right, Julia, just on Myer. Now, we've been talking about their profit, good profit, but the sales are so disappointing. And, I mean, how long can they keep slashing costs?
Look, this is a hugely disappointing sales number. In the first quarter of the financial year, we saw Myer seeing same-store growth of 1.6%. And in the second quarter, we were actually expecting to see that accelerate to 2.9%, because what we have seen Myer doing is shutting those underperforming stores, and it's been refurbishing stores, which has been leading to greater sales, and it's reopened Warringah Mall as well, but not only have we not seen growth in those like-for-like numbers, but we've actually seen a decrease in those numbers. So same-store sales down by 0.5%, and that's really quite concerning. So it does look like after the Christmas sales, we have seen pretty difficult conditions for Myer in both January as well as February. So I guess a big question mark on whether it's going to be able to hit its pretty ambitious full-year targets. It is planning to come back to growth in the net profit line for the first time, I think, since 2010. And of course, there's a lot of short sellers in this stock. It's the second most shorted stock on the Aussie share market. 15.9% of stock shorted. You know, if there was even
it's
a glimmer
quite extraordinary, Julia, isn't it?
It is hugely extraordinary, and we've seen some big moves in terms of its substantial shareholder list over the last month as well. So I guess a huge lack of confidence. And Helen, I think it really is those retailers which have exposure to that apparel area which are doing it tough, because that's where the intense competition is coming in with brands like Uniqlo, H&M, Zara, and trying to compete against these low-cost fashion brands. So unfortunately, pretty tough times for the department stores. Those numbers also reflected from David Jones, even though it's not listed on the market anymore. We've been having a look at the numbers, and unfortunately Myer looks like in the same boat with some very soft sales for January and February.
All right, so I just noticed the All Ords is looking like it just was in green territory, and ASX 200 not so, but it's sort of treading water in these last few minutes, isn't it?
It is treading water. It would have been really nice to have finished the day above that 5,800 point level, which is the key psychological level, but I don't think it's meant to be today.
All right, Julia Lee from Bell Direct, thanks so much.
Thanks, Helen.